Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex quick look. I'm going to take a look at the dollar versus yen as it continues to push higher with a central bank chat coming up at 9:30 a.m. The move to the upside in the dollar versus yen is not without a reason. The ECB has raised rates by 25 basis points at the last meeting and are expected to continue their hiking in July and probably in September as well. The Bank of England raised rates by 50 basis points. That was a surprise last week. They were expected 25 basis points with more to come. Meanwhile, the U.S. Skipped their rate rise at the last meeting, but are expected to rise in July now, and another hike is expected between now and the end of the year, maybe more if this economy continues to push higher. Yesterday we saw durable goods come in better than expected. We saw housing data also show a decent strength, and we saw consumer confidence rise. All those pointing to still a stronger economy in the U.S. That is supporting the dollar. And it's not supporting the yen. Why? Because the Bank of Japan is keeping their yield curve controls in place. Also, they are keeping their rates at low levels as well. All of that is contributing to a weaker yen. The dollar versus yen is at the 8-month highs, but the euro yen is at 15-year highs. It's going back to 2008. So, if anything, there may be intervention by the Bank of Japan that might push the price to the downside. So anyway, let's take a look at the technicals in this currency pair, because it is going to be a shift below technical levels that is going to be the defining factor for when there is more of a corrective move in this currency pair. And when I look at the hourly chart here, what do I see? Well, I see a trend line now developing over the last few trading days, where we had lows here forming this trend line, and that trend line currently cuts across at 143.60. Below that is the 100-hour moving average. That's at 143.469. Recall from last week, the price lows through here all came in and tested that 100-hour moving average, and each of the time the price tested that moving average, we bounced off of that level until the market just said, finally, we're going to the upside, and that's where the momentum continued. So if the sellers are to take more control, then the price needs to get below the this trend line at 143.60 and also below the 100-hour moving average. It just makes sense technically. Until then, the buyers are more in control. The sellers are not winning. Now, if you take a look at the top side here and you connect this high to this high to this high right here, we did move above that trend line, which is more bullish, moving to a high of 144.40. The trend line currently cuts across around the 144.31. If we start to move below that level in the short term, maybe traders might look to move to the downside, getting below the high price from last Friday's trade at 143.86 would be another target to get to and through. We did earlier today, but could not sustain momentum. So getting below that level and staying below that level, and then looking at the trend line and the 100-hour moving average would be targets. On the top side, we don't have really any resistance until up to here at 144.76. That's just the projected channel trend line off of this line right here, connected to the high right here. So 144.76. Could see the price heading up to that level in the dollar versus yen. We have that chat going on at 9:30 a.m. Just coming up in just a few minutes. We'll see how it all plays out. But it certainly favors the dollar yen's move to the upside here. We'll see if that continues from a technical perspective. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.